Hey guys, this is Mr. Oxy coming at you live from Palm Beach in Florida. It is Friday. It is February the 4th. Can you believe it? We're already in February. We are only 20 or so days away from Oxy reporting Q4 of 2021. So that's coming up soon. What I thought to do is to take a few minutes and look at a couple of the super majors. So this is kind of a heavyweight fight. And I thought we could spend a few minutes and sort of see how these guys are doing, especially since a couple of them have just reported their most recent quarter, which was obviously Q4 of 2021. So this is a fight of the big guys. And of course, being Mr. Oxy, I am not going to leave out Occidental Petroleum. We'll get back to that one in just a minute and talk a little bit about Occidental and how it is doing. So I'm comparing four of the super majors here for you. And in order from left to right, they are respectively Exxon, Chevron, Total, and BP. So a couple of them being US integrated oil companies, so international integrated oil. A couple of them being US, Exxon and Chevron. Total being headquartered in Paris, so the French super major. And then BP, of course, British, the old British Petroleum, which now just goes by the acronym BP. I'm not going to spend too much time on this comparative slides here. And the reason why I'm not going to do that is because you will notice at a glance, for the most part, it's pretty much same old, same old. In other words, there's not a lot of variances or deviations in terms of what it is that I'm showing you. So I'm not going to dwell on this and spend too much time. For the technical guys, as usual, we look at the 20-day raw stochastic score. If it's above 80, generally we say it's sort of borderline oversold. Well, you know, that's debatable in terms of where energy is going. But look where we are in terms of the stochastic. Exxon at 90, Chevron at 90, Total at 90, BP at 90. Nothing to discuss. They're all the same. How about the weighted alpha? 68, 51, 40, 50, 51. Arguably Total with its weighted alpha sort of lagging a little bit here, but at the end of the day, there's nothing much in it. They are pretty much the same. Today's opinion, as in like literally today, February the 4th, the analysts are all saying 100% buy, 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 buy. I heard and I saw on Twitter, and I heard some people commenting and reporting the news saying that Jim Cramer and Goldman Sachs have now become bullish on energy, which makes me think maybe I should exit, run away. Not yet, not yet. Energy is still pretty good. And right now we're still in a situation where the demand supply curve favors us, and the prices are high. So it's not time to pull the plug on energy yet. Everything seems to be pretty good. Only small changes compared to last month when fewer people said buy Exxon and BP. But still, even at that time, 100% of the analysts were saying buy for Chevron and Total. If we look at the performance for the stocks, once again, there's not a lot to report here. There's not a lot of change, right? So it's very difficult to even differentiate one of them compared with the other. There are a few minor deviances, but it's no big deal. The 5-day change, 7%, 4%, 1%, 5%, 1 month, 23, 11, 13, 15. So you could say 23 is a bit of an outlier. How about over a 6-month period? Exxon, the top performer here in terms of the super majors that I'm sharing with you, 42 compared to 35, almost the same, 31, pretty good, 30%, nothing to report. All of them pretty much doing the same thing. How big are they? Significant in size, Exxon the largest by far in terms of these four, with a market cap of $341 billion. Chevron, it's actually quite interesting that Chevron is almost $100 billion lower value in terms of market cap than than Exxon, but that doesn't mean it's cheap. That just means that right now the market is valuing Chevron at a significantly lower price than Exxon. Total, 152 billion, BP just over 100 billion. 60-month beta, again here, you look at volatility, so 60-month beta over a 5-year period. Exxon has pretty much been performing in line with the market, right? So that's the benchmark being the S&P 500 would be 1. So in this particular example, for 5 years, Exxon has been performing around about 1, Chevron the same, Total slightly below the market, and BP a little bit lower than that. The last earnings date, as I mentioned, a couple of them just reported recently, and 2 of them are coming up. So February the 8th, that's Tuesday of next week, we're going to see how Total and BP respectively have done for their fourth quarter of 2021. And I'm pretty confident both of them will report a really good quarter for Q4. Prices were high. And for both these companies, they benefited from the high price of crude, natural gas, etc. And they would have had a pretty good quarter, methinks. PE, if you look at the price earnings ratio right now, Exxon and Chevron a little bit more expensive based on PE only. And remember, that's just one benchmark or one tool that you can use in your toolkit. Total and BP a little bit sort of relatively speaking cheaper than Exxon and Chevron. So if you wanted to get into a super major right now, and by the way, the only reason why you would even want to hold a super major is not so much because of Exxon's recent run in terms of the uptick in price. These companies are great, but at the end of the day, the majority of people who hold them long hold them because over time you get that little sort of uptick, and it's generally okay. I mean, you can look at the 60-month beta year, right? It's sort of around 1. So you're not expecting any major outperformance compared to the benchmark, but you do get a very, very healthy dividend. And that's one of the reasons, maybe for some people, the primary reason why they have a super major in their portfolio. How about the graph? If we look at this over the last 6 months, so I selected the period 6 months in this particular graph here. So over a 6-month period, you can look at the performance of these individual 4 super majors. And once again, there's not a lot between them, although Exxon has been performing much better than the other 3, with a 6-month return of 40% compared to 30 or thereabout for the other 3. How about if we take the same graph and we overlay Oxy on top of this graph over a 1-year period? So I changed the period slightly because over the past 1-year period, Oxy had major ups and downs. So I thought, like, you know what, why don't we kind of stretch the graph a little bit from 6 months to 1 year and sort of see where those big dips were on Oxy, even though at the end of the day, if you look on the right-hand side over here, over a 1-year period, Oxy has outperformed all the others, but Exxon came close at 56% over that 1-year period. And that's quite unusual for a super major. And in a way, you can say that Oxy was so undervalued. Arguably, it even underperformed, being up only 60% compared to the super majors, and Exxon specifically up about 60%. If Exxon is up 60%, Oxy should be up 100. You know, these things don't necessarily tie together. And Occidental was significantly undervalued to begin with. It has not had the uptick yet. There are a number of reasons why, and one of the primary reasons why is because Occidental has not yet started to reward the shareholders who have been patient and patiently waiting for Oxy to sort of whittle down that debt on their balance sheet, fix the balance sheet, do the balance sheet repair, pay off the debt, reinstate the dividend over time, generate healthy free cash flow. They could possibly reinstate a dividend quite soon. It could be coming up real soon. In fact, I can't speak for Oxy, but these are situations where the company is generating so much free cash flow, they could say we're going to reward the shareholders with a special one-time dividend, for example. And I'm talking about common stockholders here because the warrant owners do not receive a dividend. So they could say, for instance, you know, we'll give the common stock shareholders, you know, $1 per share as a special dividend. And then after that, we are going to increase our existing dividend, which is effectively nothing. It's a penny every quarter, to whatever might be sustainable for them on a go-forward basis. But make no mistake about it, they are generating sufficient and a very healthy free cash flow on a quarterly basis at the current prices to be able to get into a position to start rewarding common stockholders like Mr. Oxy. Anyway, if you overlay Occidental over the 4 super majors here, you can see that there have been a number of incidences over the past year, 4, maybe even 5, where the super majors have outperformed and provided a more consistent return on investment than Oxy, which has just gone through these huge dips and valleys, right? It's only over the last, 6 weeks or so that we've seen some sustained momentum. And on that note, congratulations to all the people who are long Oxy and Oxy warrants, because by now you are sitting on a very healthy gain, and I am delighted for you, and I hope you make lots and lots of money. Specifically looking at Exxon, Chevron, and Oxy here because, Oxy and Chevron recently reported. So let's see what the analysts on TipRanks, so the repository of analysts on TipRanks, anticipate for respectively Exxon, Chevron, and Occidental. Occidental obviously reporting towards the end of February. So the target price for Occidental, for Exxon is $83, which is just a small uptick from where it is currently. So it's there or thereabouts. A moderate buy according to the analysts. 9 people say hold, 9 people say buy. And if we look at the last quarter, what a phenomenal quarter by Exxon, beating EPS 5.7% and on revenue almost 8%. Great job, Exxon. Congratulations to all the long Exxon holders. Good job, you chose well, and I am delighted for you. How about Chevron? A little bit of a different picture. It's rated a strong buy, whereas Exxon is only a moderate buy. You got 17 analysts covering it here. 13 of them are saying buy now, and 4 of them are saying hold. Chevron had a huge miss on EPS, almost 20%, but they beat on revenue quite comfortably at 6%. And the upside for, according to the analysts on Chevron, about 5%. Not too bad. Remember, if you can sock away that very healthy dividend, especially if you are enrolled in a DRIP, which is a dividend reinvestment program, and you can use your dividends to buy more stock on a regular basis, you are sitting pretty. And if you get another 5% uptick from where we are right now, you are probably liking Chevron a lot. You might even like it as much as what the Exxon longs are liking Exxon. How about Oxy? So the analyst consensus on this one is also a moderate buy. We've got 14 analysts saying 9 of them buy, 3 of them hold, and 2 are actually still saying sell. You have got to be kidding me. 6.5% upside here. We're getting close to this target price, the average target price of $43. So we'll have to see how we go because I'm not too sure. And then at the bottom of the screen here, the rear view mirror for whatever it's worth, you can see Oxy's beat on earnings per share and revenue last quarter. Guys, you tell me, man, is the Q4 earnings for 2021 going to top the EPS and revenue for Q3? I think so. Is the free cash flow going to be another record? I think so. If you want to put some of your math hats on and tell me what your calculations are, I'd be interested to know what that is. As usual, hey, if you like the videos I prepare for you, please subscribe. But as always, I look forward to your comments because most of the time, as I've said before, your comments are more educational and more entertaining than my videos. So let's get the conversation going. Tell me what you think about Exxon and Chevron. I know many of you are long in 1 or 2 of those. I know quite a few people who are long, especially on Exxon. And man, you've had a good run. If you are long Exxon and you are long Occidental, good times, right? Anyway, where are we going with Oxy? So we crossed over that magic $40 a share stock price yesterday, I think, was it? Thursday? Yeah, I think. So now we're in the $40 range for Oxy. When do we get to 50? Do we get to 50 before they announce Q4 earnings, or do we have to wait until the end of February and find out what happened in Q4 before we get to $50? Anyway, when I say that, I'm effectively saying, when do we get to 50, which means Mr. Oxy is saying 50 is more likely than 30. We may get some pullbacks, but I think we're in a good position for now. So for those of you who have been long with me on Oxy and helping us get there together in terms of where we are today, congratulations and well done. So on that happy note, this is Mr. Oxy saying goodbye for now. I'll be back soon with more. Bye.